Alright,
Yo.
we're getting ready in 2 minutes. Let me just, I'm gonna actually turn down your guys'
Shit,
volume.
Stan.
So, there we go. What's up with all you guys? What's up? Yeah. If I'm streaming FOMC live, yeah, I just need to plug it in. I'll plug it in quick. FOMC live. Do you guys want to do that stream? First of all, I'm just teaching a lesson. I'm not really touching any trading right now. Like teaching you guys my strategy. But we could stream FOMC live on Discord. I'll get Stan to stream it for you guys. Yeah. It's at 2, so yeah, we'll do it. We'll do it as well. I don't know. People like to watch stuff.
Depends what it's basically a transcript of what was discussed at the last meeting when they were, when they raised interest rates. So we want to see basically who said what, if there's more people becoming more aggressive, less aggressive, etc. Because that will have to be priced in. All right, it's 1 o'clock.
All right, we ready? All right, let's go. Is everyone here?
One sec. I think. Hold up. Let me give 1 minute. I'm just gonna.
All right.
Usually it takes a minute. Can somebody monitor the?
Yeah, I'm monitoring it. Don't worry. I just want to make sure everyone's here. Like before we start, like pull out a pen, pull out whatever you need to write, pen, paper, whatever you use to write notes. Just make sure everyone has that in. Everyone ready? Okay.
Yes, sir.
Alright, let's start. So, Stan, yeah, no, I turned on the volume. So, because, like, these guys are talking here in the Discord. The Discord is in the description right there. I'm a new dude. Actually, let me put on my camera so you guys could see. I'm part of, like, the APEXBULL team. So, I'm just teaching my strategy to you guys. So, you guys, you guys could learn something. Where is it? The video capture device? No. Image. Is it? Wait. Video. Yeah, it is. Okay. Here. Let me put this on. Let me see where I'm at. Thing is, I'm live on Discord right now. So if you guys want to see my face, I'm on Discord. All right. So let's start. So I'm going to teach you guys a strategy called Smart Money Concepts. This is what we use in the hashtag callouts channel. It's pretty successful. It's pretty good. Just something good to know, Let's get started. So, please, before we start, I don't want any like crap. I don't want to hear anything. Just pull out a notebook. I want you to set up a trading journal. So what I mean by a trading journal is like if you're an amateur, if you don't know what this means, is I want you to make like kind of an Excel spreadsheet, but on paper. I want it on paper, just so you know every time you take a next trade, what happened in the last one and everything. So just get this down first. Let me know when you guys have this down. I'm gonna just keep pushing forward though. All right, so what is Smart Money Concepts? It's following the footprints of bank order flow. Simply, that's literally just what it means. So we take bank order flow orders as a point of reference for our next trades. So why use Smart Money Concepts? Right now, technical analysis is pushed out by the hedge funds. It's like books, right? So when you study, let's say, so in the order for trading, when you push out a technical analysis book, everybody studies it. So everybody that really trades, everybody knows what a symmetrical triangle is. Everybody knows what a bull flag is. Everybody knows what a bear flag is. And they're all manipulated, but they're manipulated to the point where they could still be successful, or trading wouldn't be a thing within itself. If I'm going too fast, let me know. All right, so this is like this is the order of what I'm going to teach you guys. The order block, the refinements, how to identify an order block, what is liquidity, which order block to take, imbalances in market structure, and change of character. So first, how to identify an order block right here. So you begin on the 1 day, 4 hour, 1 hour, just start on a higher time frame. And what I want you to do, I'm going to show my chart right now. Before we even start this, I'm going to switch over to my trading view. So I have a clean chart. This is a default trading view chart right here. First of all, I want you guys to change your settings just because of the psychological aspect or whatever people say of the green and red candles. So here, let's go to settings. Let's change the body to white and black, white and black, white and black. Then what you're going to do is the appearance, you'll change it to, let's just change it to like a, there we go, solid. All right, here we go. Everyone get that down yet? Body, look, I'll put it right here. Just the color of the chart itself. Just change that right now. So yeah, here. Once we begin this, what's it called? We'll start. So to identify an order block, I have a clean chart here for you guys. What I want you to do, remember what it said here. The last bullish slash bearish before an engulfing bearish slash bullish move. So the last, so right here, I'm going to show you guys. So the last bearish move for a bullish order block before a bullish move is a bullish order block. So here, let me get this started. So the last bullish move before a bearish one has to be engulfing. What I mean by engulfing is this black candle right here, the close of the candle. You see this number right here, the close? The low of the last bullish candle, the close has to be below it. So you see how the candle closed right here, so it engulfed it. So this is going to be considered an order block from now. This is a point of reference, so to speak. For bullish ones, it's the other way around. So bullish one, here. The high, so this time it's going to be the high. The high of the candle, the last bearish candle before the bullish move, the bullish candle closed above this high. So it closed way up here. So that's an order block. Here, let's see this one. Oh, this one is invalid, you see? It didn't close below the low of the last bullish candle. That's your bullish order, bearish order blocks. Here. Let's keep looking. Just practice this for now. Practice this.
Robert, one sec, sorry to interrupt.
What's up?
The Discord one is not showing. It's showing your PowerPoint, not the
Here,
screen.
I'll share my PowerPoint on Discord. There you go. So that stays passive at all times there. So this is the last bearish move before a bullish move. The bullish move engulfed the last bearish candle. It was considered an order block. This is the point of reference that I was speaking about earlier. So let me go back to.
You can't see your trading view at all on Discord.
Yeah, I put up the slideshow. Do you want me to just leave the? Yeah, I'll just leave the, because I can't put two at the same time.
No, but you should put on your screen because you're explaining on YouTube. You can see the screen.
Yeah. What I'm saying is I'll just put this instead there. All right, here. So let's restart a bit, right? Let's cut back. So you guys should watch it on YouTube as well. So look, the last bullish move before a huge bearish move, the low of the white candle. So white candles are bullish, black candles are bearish. So the bearish candle itself closed below the low of the last bullish candle. So the low you see right here on the top, it was 21,538.51. This candle closed at 2173.57. So this is considered an order block for now. Just get this down. Then the bullish ones the other way around. Let me just keep pushing forward. We're gonna go over these order blocks over and over again. Just practice. So the requirements for a valid order block. The requirements: engulfing candle slash bullish slash bearish for the to form the order block. When an order block is formed, it is required to break the last high or the last low. So that is the break of structure. So for me to validate an order block, we need to blow through a high or through a low in one move itself. So what I mean by that is, and let me draw this out for you guys. So let's say here, look. Let's change the settings of this. Here. So it's gonna take a little while. So here you go. Let's say we have this. All right, this itself is whatever. All right. Let me move this over here. This over here. This is just I'm just showing you guys candles, like a chart itself. I'm making a chart right now. It's gonna take a little second. Here. And then this was the last bearish move. I'm gonna change the color, don't worry. Here, look. Change the color of this to black. Alright. Let's leave this at this right now. Then let's just say the high was here. Alright, here we go. And then this is the last bullish move. I'll switch the color again. Let's just say currently we have this market structure, right? So this was the, wait, let's just put this over here. Last bullish move, I'll change this to white. This takes a little while, my bad. Let's put this for now. And then I'll put this other candle right here. Okay, I'm putting this in candle terms. I could have done it in light chart too. Just, it's gonna take a little while. Okay, so this, everybody could agree this is the last high, right? Discord people, you could ask me questions. Look, this is the last high, right? Right here, this is the last high. Do you guys see this? Do you understand this? Everyone understand this at all? People on Discord, do you understand this? This is the last high. So the last high. So for us to validate this order block here, if you guys could see, this order block was created because of the engulfing structure of the bullish one that engulfed the last bearish move. We need to break this high, right? To validate it. That's called the break of structure. So break of structure, I literally just mean like the break of the last resistance or last support in a bearish order block form. So as soon as you break the last high, then this will be officially an order block. This is how you validate an order block. So look, right here. So if we get, but in one bullish move, we cannot have a bearish move in between. So this order block right here, right? Look, right here was the last high, break of structure. We closed above the high. See, we closed above here. These wicks we closed. This is a break of structure. This is a valid order block. You see, then this played well after. Right here, this is not a break of structure. You see, because look, we had a bearish move before. We broke the high. We closed above the high here. So this is the high. Let me show you guys the high. This was the high. Right here, we weren't able, we had a bearish move before. It has to be one continuous bullish move. We cannot have any bearish candles in between. Therefore, it's not considered an order block. It's not a valid order block. Let's go back to the slideshow. All right. Everybody get that down yet? Everybody has that down? Anyone? Any questions about an order block? Anything? No one? All right, let's keep pushing. So, order block refinement. Now I'm going to push towards order block refinement. So right here we have a daily range of an order block, right? This is invalid. So let's actually delete this. This is not an order block. We have this daily range here of an order block. But since I trade at such high leverage, I trade at 100x, this move itself is 3%. I'm not risking 3% in a trade for a 1% move upwards. So what we have to do is we have to find an order block within that daily range order block in a lower time frame to get a more sniper entry towards that trade. So once I'll come down slowly, 4 hour, right? 4 hour time. We're on this order block. We currently have this right here. This is the next order block. As you guys can see, the last bearish move before a bullish one. We broke this structure right here. He broke this structure right here. There we go. Now we push this forward. Then we look at an order block within the 4 hour order block. So I go to the 1 hour, push towards the 1 hour. Look, come back here, 1 hour. What do we have? We have this order block right here. You know, this is so yeah, we have this and we have this as well, because we broke this high here. All right, let's push forward. Boom, boom, boom. Then we go towards the 15-minute. Where's my chart at? But okay. 15 minutes. Okay. Can't go that far back. But 1 hour. Alright. So here, based off of this, your entry so far. What's up?
Don't want to interrupt, but your chart isn't your chart's frozen on YouTube.
Frozen on YouTube?
Yeah, you can't see your chart from the PowerPoint.
Of course it is. Oh my lord. Alright, let's go back. This is difficult, my bad. Look. Daily. The big one was the daily, right? Okay, so this is the daily block itself. So let me label this as daily. This is a little bit time consuming. 1 day order block. Alright, we have this 1 day. Then we have this 4 hour right here. We look for order block within the order block. So here. 4 hour order block. Okay. Then we go to the 1 hour. We went to the 1 hour and we found this order block here. Order blocks within order blocks. That's all we look for all day. Here, boom. 1 hour order block. One hour order block. Okay, do you guys see this so far? You guys understand this? We went from a daily time frame to the 4 hour time frame to the 1 hour time frame. Usually I go to the 15 minute time frame and I look for an order block within that 1 hour order block, and then that's where I find my entry. So for my entries, so what we do is this. My strategy itself consists of this. We go in at the top of the order block. Our stop, we don't have hard stop losses in smart money concepts. Always, so I go for, this is what we do, 1%, and I close my entry once this candle right here, this candle right here, close below this block in the 5 minute time frame. So what I would do is I would have to wait, let's say, I'll show you guys an example. So if this candle would have come down to, say, okay, I can't put it. Just say, okay, so the order block itself is in this range. You see this? Let me just move all these away. This is the order block right here. So let me just turn up the opacity. Okay, so you see this is the 1 hour order block. Our entry was right here at the top of the order block, and the candle only wicked through. For me to close this order, this position, the candle has to close below 21,390 at the 5 minute time frame. We need a hard close. That's why I don't want to get wicked through, wicked out of my entries. That's what happens a lot to people. You set a hard stop loss, price just wicks through, and then it goes back up. So we wait for a hard close in the 5 minute time frame below 21,390 for this specific order block. So look, our entry would have been right here. TP would have been 1%. We go for 1% moves, and that would have been an instant TP. You see that sniper wick entry, you get out at 21,708. Same thing could have happened to this order block right here, this 1 hour order block. So boom, let's see how this reacted. If you, in the 15 minute time frame, you could probably refine this further and get a better entry, because I think there is a 1 minute 1% move in here. So 1%, you see? Once again, 1%. The close level would have to be below here. I usually don't, 1% is too much. I don't like anything more than 50% risk. This is a lot of risk, but there's most definitely a refined entry in there. So for now, I'll just put it here. I would only close this position if it goes below here. So if it closes in the 5 minute time frame below 21,130, then I would close the order. But once again, you know, hit the order block, reacted upwards, and TP hit. I'm quick. We scalp 100 times leverage. Quick orders. So then that's that. Everybody get that? The refinement of the order blocks. Okay. You guys can speak, you know. Here, hold up. Let's switch this back to here. Boom. All right. I can't see your chart right now. Is the screen frozen? On YouTube, can't see any movement. So you wouldn't go any lower than 15 minutes to refine. How do you know the best time frame to choose your entry? So this is how it works. I wouldn't go any lower than it depends what type of crypto you are on, but it just depends on the risk itself. So if the order block, let me try to find the real example. This is just a new chart I made for you guys. So this is my current chart here. All right, this is my current chart. So this block right here was a 1 hour block, right? Chart is a mess. Hold up. 1 hour block itself. So the amount of risk in this block itself is not high. It's 30%. I usually look for 50% is the max I go. So if it's just 30%, to be honest with you, I could just set my order here. So this is a short, this is a bearish block. And the risk is 36%. So unless price closed above here, then I will close the order. So it just depends on the amount of risk you have. Let's say for a really big order block, that's when we look for refinements. So here, look, this order block right here, it's a 46% risk. So here, yeah, I start looking for refinements. Let's see another one. Let's see a really big one. Here, perfect example. This right here is just too much. This is what? 1.3%. I'm gonna get liquidated. So because I use 100 times leverage. Remember, I need 1% to make 100%. So here, once I come down, let's see how I refine this block here. This is what? Okay, so this was a, thing is I don't have the things here. Okay, this is a 1 hour order block, 1 hour. 1 hour order block. And it was refined straight to the 5-minute order block, I believe. What is this, a 3-minute? Yeah, don't go lower than 5 minutes. Don't go. This is just me being dumb. Do not go below, because there was no bullish order blocks in this. What the hell? All right, yeah, don't even mind this. Let me find another one. There's so many. That's the thing. Here, let me check your. All right. Let's see another one. Let me find another one here. Let me go in this messy area here. Yeah, that order block. This order block here, the hit TP. This one, you see this risk amount here is not high. So, but the thing is, we did have a close price. It's 10%. So here, this is a good amount right here to risk. So I would put my entry right here, the short entry right here, and then boom. I mean, I would have had closed this order. I cannot lie to you, because we did close above price on the 15 minutes. So probably if there was a 5-minute close above this, which did, then I would close my order. But it did hit TP. But you know, it happens. Let's see another one here. Flew straight through this one. Right here, perfect example. This is pushing back a bit before that big FTX dump. So here, this is too much risk. 2%, way too much risk. Too much risk. So I refined this. I believe this was a daily. Let's check this out. So here, yeah. Where was the big dump? What? No, this is not it. What was I? Oh, it's around here. Wait. Check the 4 hour. So before this big dump. Alright. So this block itself was a 4 hour block. But the amount of risk in it, that's why I took this 4 hour block just with the 4 hour block. Because it's below 50%, you see? and it's below 50%, I just take it at the limit. I just put the limit here. I just take it right here, the long position right here, and I was able to play this news off, this news play here, and the risk itself was 40% around there, and we took it up, up, up. Let's go back to the 1 hour. So here, you see we touched the block right here. Once we touch the block, we touched the block, entry hit, wick entry, we exited. I took 3% on this trade because it was a news day. So on the news day, you could play a little bit riskier. So yeah, I took 3%. Right here, this bearish order block up here was a 5 minute. I can't go that far back because of my trading view. But this is at the top of the news play itself. It was during, I think it was CPI. When was November 8th? Someone just checked that out for me. It was a news play though, and we took 6% as well. It just, we look for scalps. So the original order block itself was in the 1 hour. You guys see this? This is the 1 hour order block that we were looking for. That was a bearish one, and the news play was about to hit there. So hit the order block, took the 5 minute refinement right here. I don't know if you guys see this. There's a refinement right up here. Very low margin trade, you know, very risky because of news. 0.05, so 5% loss risk. So why not just take it? You understand me? It's a pretty good RR, good risk to reward. So we took that. So let's push forward. Any questions about refinement so far? No questions about refinements, anything like that? It was CPI, all right, perfect. Any questions, refinements, anything like that regarding refinements? No questions, all right. Switch back to the PowerPoint. So let's come back over here. Let me switch over to this as well on Discord. All right. Liquidity. So this is the whole purpose of smart money concepts itself. We look to trade outside of bear flags or bull flags. So what you consider support and resistance, we consider liquidity. We don't care what is up. I don't care if there's a head and shoulders, bull flag, bear flag, symmetrical triangles, pennants, wedges. Those, we don't trade within those patterns. We trade at the breakout of those patterns. So if you are a pattern trader, you have realized sometimes that when you take, let's say we break downwards from a bear flag, right? You put in your trade. Let's say as soon as the breakout, it closes, you get a breakout trade, you put in a short, right? And you notice this price just bumps back up to your stop loss and instantly just dumps back down. That's what we do because we look for it to trade in within the breakout of the trade itself. So let me show you. This is why I have patterns up on my chart. Look. Switch over on Discord as well. Here we go. All right, so we have, let me get a clean liquidity line here for you guys. So let's just start on the new chart so I could demonstrate live. All right, let's go on the new chart. So we go to the daily. Let's say any patterns you guys see, you draw out. So let's go to the 4 hour. There's nothing yet. All right, so let's see what we can find. We have this channel here somewhat. So boom, we have this breakout here. I'm just gonna take it out this way because I have the magnet on. Wait, turn this off. So we broke up from this channel up here. Right, we look for entries, so you would put this is just a reference itself. Draw a horizontal line just to see the high, and you could most definitely find an order block back here. Let me try to find something now. Should I go further back? Let's see. Damn, there are no patterns on Bitcoin currently. Let's switch over to Ethereum. Damn. Let's come over here. Okay, so this right here. This is Euro USD, by the way. So, you got somewhat this type of bull thing going on, this bull flag going on. So what we do is this, right? We consider both of these lines liquidity. We do not touch any trades throughout this whole period. This is what the retail traders are following. We do not care. It does not matter to us. It's just there. We do not care. Just do not touch anything while you're in here. We look for trades above and below liquidity. That's the only time. So every time we break up, we break up. So right here, we broke upwards. You see this? Let me take a brush out. So we broke upwards, and we're looking for shorts. Instead, while people are looking for longs right here, as soon as this breaks out, everyone's looking for longs, right? So we're looking for shorts. We take a short up here, and we TP down here, back at liquidity. That's technically, that's the whole purpose of SMC. See, we broke out of this bull flag. We took this, everybody longed. We took a short right here at this order flow, or this order block. Boom, we TP. Let's go back. Let's find another one, another example. Thing is, this low here is probably going back to ages, yeah. Here. No, we can't even consider that. But technically what it is just we're looking for breakouts of usually I'm on the 15-minute time frame, so you could find a lot more because this is long-term liquidity. Like, it's very long-term liquidity. So we do trade in between. I'm lying to you, because we do trade in between here because we do have smaller symmetrical triangles and patterns and lower time frames. So currently for Bitcoin, look, so we had, let's say in the last 15 minutes, we had this right here. This thing going on around here. This pennant somewhat broke up. We had not much yet, but let's see here what I could find. Also highs and lows. So support and resistance as soon as we break out of support. So let's say here, right? Did we ever break below this? All right. As soon as we broke below this, everybody's looking to short, right? See right here? Maybe on a 30-minute, 1 hour. All right, so here. Turn on my magnet. See this? As soon as we broke this low, we broke liquidity. So this is considered liquidity. We don't call it support or resistance anymore. Everybody's looking for shorts here, right? We're looking for longs. Hit the order block, it reversed upwards. Everybody's stop losses got hit around here because they saw the breakout back in. Let me show you now. Short position, no long position. So you put a long here, 1%. Too much risk. I'll actually look for a refinement here. 1%. 1%. 15 minutes. We come back down here. What do we got? Nothing. 5 minutes. Can I go that far back? Hopefully I can. Yep. Nope. 30 minutes. Nothing. 3 minutes. Can I go that far back? So nothing either. 1 minute. Come on, don't. All right, there we go, perfect. So on the 1 minute time frame, you have to find some type of refinement. This is too much risk. So here, this is the last order block to choose from. Let's see what happened to this order block here. So boom, this will be your entry here. Let's see, my entry is around here. My risk, and yeah, the risk would be pushed to 1-1 here. So yeah, this is another order block you could have taken. Most of the time when I don't have a refinement, what I do is I push this out and I just take the 50% mark of it. So like if you have no refinements whatsoever on like a 1% raw move, how much is this? Like a greater than 1%. So a greater than 1% risk order block, and there's no 5-minute refinements. I just go down to the 5-minute, like not even 3 or 1 minute, measure it out to the 50% line. So then we could follow our rules of following the 50% rule, not risking more than 50% on a trade. And then there you go. You would have had that. The 1% you were looking for. And then if price closes below here at 15,814, then you would have closed your order or your position. So you would have gone a pretty sniper entry. Look at these lows, sniper entries. All right, next. Let's go back to the PowerPoint. All right, that's liquidity. I also showed you guys the entry part. So you guys understand liquidity, right? Please, before I push forward, because you need to know liquidity. Everyone understand that? Yes? All right, perfect. All right, let's push forward. Which order block to take? So remember, we need, for a valid order block, we need a break of structure. First of all, we need an engulfing candle. You guys understand that fully, right? To even make an order block, we need that engulfing candle. And we need to break the last high or the last low. So break the last high for a bullish one, break the last low for a bearish one. The break of liquidity to the upside or the downside, you see right here, we broke this liquidity line here, this pattern right here. We broke upwards, hit this order block here, and we came right back down. The break of liquidity right here, you see I marked it out for you guys right here. Break upwards, hit the order block, went right back down. All right, so that's a guideline to how you should take your order blocks. All right, imbalances. I'm going to cover something completely different now. These are just points of references. An imbalance is when price moves up too high, like way too quickly. So right here, price moved up way too quickly, way too fast, right? So there's gaps within this candle itself that need to be filled. So this candle, a 0.25% move or above on Bitcoin is considered an imbalance. So right here, it's only the body itself. We have two imbalances, right? And price needs to come back to fill at least 50%. At one point, it's like gaps in stocks. At one point, they have to come back and fill. So right here's another one. They're just points of references to tell you that price is going to come back down here at one point. These could also be entries. So you see price came back down to 16. What is this? So the low, 16,320.02. So it came back down here, filled 50% of this point, above 25%, anything. This 50% mark, and came back up. It just, you could take them as entries, but I just like using them as a point of reference to help out with your trading. So let's say I'm looking for a bullish move, right? So I'm looking for bullish order blocks here. So I know price or bearish order blocks. I know price is gonna come back down here. Of course it's not. Oh my god, I hate switching between this stuff. My bad. Here, I have to restart this. Where is it? Why is my thing not up? Hold on. Let me change my chart here. How much changes to this? Because I can't even hear. Let me switch my thing up here. Alright. So, come back over here. Imbalances. So, big move. Let's go back, restart. I didn't know you guys weren't seeing this. Hold up. A big move, right? So, these are big moves right here. 5-minute time frame above 0.25%. So, you see right here, this percentage level, you measure it like this. I see this candle right here, 0.41%. So I measure out the body, put on the magnet to help you out, the body, and draw out a fib that has the 0 level, the 0.5 level, and the 1 level. Price is required to come back down to this level at 15,855 at some point. It's just a point of reference. You know that price is going to come back down here. It might not react to it. It might not react upwards, but it will come back down to it. So here, I found this candle right here, 0.99% move. Anything above 0.25%. So here, look, we have this move right here. 16. You see, price came back down here. It's just, I use this as a point of reference. Do not use this for trading. And now it reacted upwards. But we know this imbalance has been filled. That's the imbalance. So the 50% of the candle. Everybody understand that? Let me switch back over. Everybody understand that? I only see the PowerPoint. Yeah, I know. I just realized that.
Somebody asked, why do gaps have to be
I
filled?
can't see your chart. What do you mean, man? My chart is up. Why do gaps have to be filled? Because it's just orders. So like it creates instability within the chart. So in stocks, right? Let me show you a stock. The reason why stocks move, no, this is all crypto. So stocks itself. The reason why all stocks move differently compared to crypto is because the amount of gaps in it. It's just like these amount of gaps is just, every stock is going to move differently. If all stocks are open 24/7 and they all have the same amount of volume as Bitcoin, the charts will look super clean and they'll probably follow each other. But it's just, these are just points of references. They have to be, there's just orders have to be filled. This gap imbalance hasn't been filled. These gaps, look, most gaps in stocks get filled. These are just price jumps that need to be filled for to create stability within the ticker itself. So right here we have this gap right here. It might be filled. This is Tesla, by the way. So just everything has to be filled. We need balance within the market so price can push flowing normally. You understand me? But Bitcoin won't show it. They won't show these gaps because Bitcoin is always on. Bitcoin never stops. It's 24/7 all day, every day. That's why the charts are super clean, super straight. But price could still jump in the lower time frames, but they won't record it. You understand that? Should I start pushing forward? It's fine. I don't need to show you guys like the guys on Discord, the Tesla stuff. Just what I should do though. What you guys should do is go on the YouTube as well if you want. It's a choice. Everyone understand that so far? Awesome. All right, perfect. Good to answer your question. All right. Let's come back over here. 1 hour. Let me switch over here. So market structure, change of character. So whenever we are looking for trades in smart money concepts itself, look at the market trend. So market trend is higher highs, higher lows, lower highs, lower lows. So right here, this is what we have, right? We see this change of character right here. We see that this is a bearish change of character, right? This is a bearish market trend. So right now we have, as soon as we see, okay, so we see nothing so far, right? From here to here, we see just a new low, right? We got a new low. As soon as we see this, a lower high, we know this is a bearish market trend. So we are expecting it to blow through here. So as soon as we see this close right here, we're looking for shorts. We're just looking for shorts the whole way because we did blow the last low. So on the way up here, right, because we blew through the last low, we're looking for shorts, right? And then we had a new low here. So then as soon as we will know that we will have a change of character is as soon as we have an equal low right here, we are expecting either a pattern to pop up or a bullish one because we got actually a higher low, right? This is, you could consider this higher. So we got a higher low and we broke the last. As soon as you see this new high right here, we know we're changing towards a bullish character right now. So right now Bitcoin is bullish on the 1 hour time frame. Here, look, we blew through this high. We got this high right here. We got a lower high, no, a higher low, I mean, right here. Let me switch back over here. So here, look, you see this? This is the last high. We broke down. We broke down this low here. We got this lower low, and then we got a lower high. So then we know this is bearish. So this is considered, Bitcoin is bearish right now. As soon as you see equal highs, that's a sign it could change. You could either start going into a pattern. That's when you start looking for trades. So not really looking for trades, but you just start figuring out or start expecting Bitcoin to move differently, or whatever you're looking at. So we broke this high, created this new high, lower high. So right now it's bullish. So right now you should be looking for longs. So if I were to look for longs presently, it would be around here, this area here. So this imbalance itself, if you would have taken the imbalance trade, so the imbalance would have actually been pretty valid to take because it is following market trend or market structure. Look, let's see here. This is following market structure, so our entry would have been 316-ish right here. So if you were to take this, it is still a pretty valid trade. And then you put your SL at the 1% mark, the 1% level here. So the 50%. Or the imbalance itself at the bottom of the imbalance. So this is a pretty valid trade. If you would have taken this, you would have taken what, 1% again. Let's see if it hit 1% yet. Yeah, you see, pretty valid trade so far. Just try to look for trades following the market trend. Always following market trend. Not always. You don't have to always, because then right here, this is an order block we took this morning, which went well. But this is a higher time frame order block, and we were expecting it to not break that high because of the order block itself and the break of this liquidity right here of this head and shoulders. You see this inverted head and shoulders people are following here? Right here, look, this is a neckline. We're expecting price to break above there. Boom. That's how we start looking for trades. We had this liquidity right here as well. We broke up this liquidity. Let me just mark this down for you guys. We broke up for this liquidity. This follow all our rules for taking order blocks. Market trend is not required to take the order blocks. Remember that. It's not in the rules. It's just a good thing to have. Just following market trend when you take your trades. So boom, we take this 4 hour. Let's see. Did it move 1% downwards ever since? Let's say I just took this this right here. Yeah, it did take 1%. You see? So if we were to refine it, in the 1 hour right here, boom. We never had a close above so far. Let's see. 15 minutes as well, no close above. So your entry itself would have been this morning. Oh, when was this? So let's say you would have put a limit 2 in the morning EST. Would have been here. 1%. Your risk would have been right here at 38%. Only if it closed above. You see price never closed above. You see this? You would have been wicked out if you had a hard stop loss here. Even though it went up to 70%, I do not care. I don't mind seeing red on the screen. Wait for the close and be patient. It's all a mental game in trading. Just wait. Boom, 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 and you took your trade. It would have been actually back here if you would have set a limit. It would have hit here first. So boom. You guys see that? Everyone see that? Hold on, let me switch it back to the here. Does everyone see that? Alright. Let's switch back to the PowerPoint now. Alright, perfect. The chart settings, if you guys want that, really it's completely optional. These are my chart settings. If you want to just take a screenshot, let me know when you guys are done with that. Alright, let's keep pushing forward here. I don't know what is happening here. Is this it? Yeah, this is pretty much it. This is it. This is all it. That's all it is. Any questions? We're done. So first of all, you guys should have written down what is an order block. If you guys want me to review. Order block, the engulfing structure, the engulfing candle with the break of structure after, the break of the last high. Boom. That's an order block. And then the break of liquidity to take the trades. So we're looking for patterns, the break up of a pattern. We look for shorts. Break down of a pattern, we're looking for longs. What else would the market structure? Just a point of reference, good way to teach. Look at this. There's actually a daily in here as well. See this breaker structure right here? Wait, let me switch back. Trading view, the breaker structure right here. There was the breaker structure right there for this daily order block here that I've drawn out. You see? Boom. So for now, just practice. Go to the daily, look for the order block. So right now, this is an order block. You see, broke this structure, broke this last high. If you cannot figure out whether it's breaking the structure or not, go to the line chart. The line chart will always help you. Draw out the order block and check the last low. So this low right here, you see, we closed below it, we broke below it. Straight line downwards on the line chart. Boom. That's a considered an order block now. Daily order block, we look for refinement inside the daily order block. Comes up to this. So it would come up to this. You see this order block in here. Could have even taken this one if you wanted. See, because of the risk margin itself. The thing is, I wasn't looking at the daily time frame. So you see too much risk. You would have taken the one in the middle. Way less risk, you know. 50% still. That would have been even a crazier entry right here. Look at this. So let's look for the breaker structure within here. Come to the line chart. This is the when the order block was created. We broke this low right here. This low and this low. Doesn't matter how many lows it broke. Doesn't matter. But we did have a breaker structure right here. Let me just change the color maybe. Yeah, you guys could see that. So we had that breaker structure. So that was considered an order block. You see that entry right there? Crazy entry right there. This follows our 50% rule. So we would have just taken it at the bottom of the order block. So I forgot to say that. For bearish order blocks, it's the bottom of the order block is your limit. For bullish ones, it's at the top. So bullish ones, we put our limits at the top. Bearish, we put them at the bottom.
Somebody's asking if there's going to be a video review afterwards, like they can watch.
That like this PowerPoint itself, it is voiced over as a course. I should just post it. I'll post it out. So yeah. Does the engulfing need to involve the wick or only the body? Everything. So wick and body. So wick, yeah, it has to engulf the wick. It cannot just engulf the body. No, that's not an order block. It has to engulf this wick. Every single wick it has to engulf. So right here you would have gone the refinement for the 1 hour. But we already follow our 50% risk rule. I don't even think, yeah, you see it didn't hit. If you refine it too far, sometimes you might miss your entries. And look, this order block was used right here. You see how it was wicked into? Order blocks can only be used once. Always remember that. This was wicked into, so this order block would have been invalid. But in the 4 hour, you see, this is part of the breaker structure itself, so it wasn't used. So right now we currently have this one, this bullish one right here. We broke this high. So right here we broke this high right here. Boom, boom, boom. So right now we're just waiting. So let's actually refine that. So if we were to prices ever come back down here again, let's check it out. 5 minutes. Let me actually go to the 1 hour first. Let's just go to the 1 hour. Stop being. Okay, boom. So right here, so we have 4 hour. Oh no. We have this refinement. Come right here, 15 minutes. 5 minutes. Okay, let's look for one inside this 1 hour. Okay, boom. Right here. See right here. Boom. Now our entry would be set like this at the top of the block. And we're looking for a close above here to close this order. So 18% risk, very good, very good. And we're looking for 1% always. Don't be a pig, don't be greedy, just 1%. There we go, 1%. And that would be your entry right there. Everyone good? Is there any way to see the full video again, or is it just a live session? Get it or waive it? I'll post it. Like this PowerPoint itself is the course that I sell on the Carlos channel, but I'll probably put it out.
And you should be able to rewatch it on YouTube from the live.
Yeah, you should. We get to any questions, we're done. Like, this is it. This is the whole strategy itself. I didn't want to bullshit you guys and give y'all like 50 videos and all that. It's quick, simple, not waste your time.
Right, and also we got FOMC in 7 minutes, so...
FOMC in 7 minutes? Alright, you want to take over?
Yeah, I guess. Let's,
So just,
hold up. Guys, if you want to do FOMC, we want to cut this video now, so we can, archive it. So, leave it as a lesson. So if you guys want to hop on Discord, the link is everywhere in the description pages, wherever you're watching.
Yeah, discord.gg/daytrade. What we're going to do, we're not even going to end the live. What I'm going to do is I'm going to end the live because I'm on my computer. So Stan could start living on his computer. If you guys understand that. So don't even leave. If you're trying to watch FOMC.
But YouTube should be cut off. Why? Well, because this should be a separate lesson. Because nobody cares about the FOMC right now. In 2 years, you know what I mean? Or
yeah. I'm just saying. Are you going live right now?
Yeah, I'm gonna go live right now. So
right.
Everybody who is on Discord, you guys can stay, and everybody who's not on Discord, just join in. Click on the Discord link, and what was it? Discord.gg/daytrade. Daytrade. Yeah. So easy to remember. And again, the full link is in the description as well. Hop on because we're gonna have big news right now, and then it's pretty much over till next Tuesday because of the Thanksgiving and Black Friday. All right. So Thank you, Lobo, for sharing this. I'll take over now, and we'll go from there.
All right.